Holy smokers, guys, we are getting our flapjacks flipped like they have not been flipped in a while, okay? I want to take you through the carnage on Wall Street once again today, all right? I want to discuss a lot of the things that are being discussed on mainstream media. I spent a lot of the last day or two kind of looking on CNBC and Bloomberg and seeing what a lot of the stock market experts believe why the stock market is going down. We're going to kind of look at some of those bearish cases, all right? Then I'm going to give you my opinion. I've done a lot of thinking about this, and I think there are two reasons why the stock market is having so much trouble right now, and I don't see anybody talking about this right now, guys. So I hope you enjoy this. It's a little scary, okay? So let's get into this first. Look at some of the carnage. So the Dow fell another 500 plus points today. S&P 500 down 2+% today. Nasdaq had another bad day, down well over 1%, down another 92 plus points. The Dow at one point was down over 650 points. All right. Amazingly enough, my portfolio was actually decent today. I actually think I technically made money. It's a miracle of life that I could have made money in a day like today. Like, it was bad out there, guys. Now, in terms of some of the stocks I tracked, there's still a lot of stocks that had really bad days. Nvidia was down another 4+% today. We had GE stock down another 4+% today. We know that one's just been hammered. We had ACLS down over 3% today. Blue Apron down another 3% today. It's $1.30 stock now. Oh my goodness, guys. Qualcomm had another tough day today, down another 3.5% today. We had RH, which was one of the rare stocks that actually had a great day. The stock was up 10%, like amazing performance on a day like today. Amazing Zon was down another 2+%, down around $36 a share today. We had Square down another 10+% today. That stock has just been killed this week. Absolutely horrible week there for Square stock. We had Shake Shack down over 2%. We had Caterpillar down around 2%. We had Netflix down nearly another $5 a share today, all right? So needless to say, it was another really bad day out there. I would assume most people's accounts were down today. Tough day out there. So like I said, over the past day or two, I spent a lot of time on CNBC, Bloomberg, just kind of looking at what people's opinions are, seeking alpha, and kind of seeing like the main opinions out there. And then I'll go into what I believe is really going on out there, guys. So the first one is a lot of people are saying, well, it's the tariffs. The tariffs are causing the stock market crash. The tariffs are causing all this uncertainty, okay? We know the 10% tariff has got put on a month or two ago, and we know a 25% tariff is coming on a lot of Chinese products and a lot of international products coming here at the end of 2018, okay? So a lot of people are saying it's the tariffs that are hurting things, and my thing is, I do not believe this is the full reason why. I think there is a slight bit, and we'll circle back to this in a minute, okay, when we kind of go into what I believe is going on. There is a slight bit of truth to that, but I do not believe this is the full reason why the stock market is going down right now and struggling out there, okay? A lot of companies should still have phenomenal earnings despite the tariff situation, okay? As far as interest rates, a lot of people are saying, well, it's because interest rates are going up. First off, interest rates are not going up a lot. Interest rates are going up a little bit, like 0.25% at a time, and they'll probably move it at another 0.25% before the end of 2018, and maybe 2 to 4 times throughout 2019, as long as the economy stays decent, okay? And if you look at history, okay, if you look at stock market performance in the past, the stock market has performed very well in the past when interest rates were at 2%, 3%, 4%, 5%. The stock market has still had phenomenal times even despite an interest rate of a 2, 3, 4, 5%, okay? So just because interest rates go up doesn't mean the stock market's going to crash. It doesn't mean, that's why the stock market is going down, because we can go throughout history and see a ton of times when interest rates were very high, much higher than today, and the stock market performed very well. And we can also look at plenty of times in the past when interest rates are at 0 and the stock market literally crashed really ugly or just, things were not good out there, okay? So interest rates, I don't think that's at all the full reason why. And then number 3 and number 4, these kind of go together. Some people are saying we're in a stock market bubble. Some people say, oh, it's a global meltdown, economic collapse is due. And these two groups, I kind of put them together. Stock market bubble, I think that's pretty ignorant to say, okay? When I look at, there's something I love to judge, is what are companies' earnings power out there versus their stock prices. That really gives you a fundamental judgment judging of if the stock market is overvalued, undervalued. Right now, I can make a case based upon what companies are earning throughout 2018 and expected to earn throughout the remainder of the year that we are in the cheapest period I've ever seen since I've been in the stock market. If we're looking at 2018 earnings, 2017, no. 2018 earnings, because earnings are so strong this year that literally it's going to make the stock market look like we're at probably the cheapest we've been since I've been in the stock market in 10 years. And I remember I invested in the stock market when it was at 7,000, 8,000, right? But at that time, companies had almost no earnings power. Right now, companies have unbelievable earnings power, and we're at like, a 25,000 type number on the Dow. So when I look at this, I say, is stock market bubble? That's a pretty ignorant thing to say, in my personal opinion out there. It just doesn't, you can't make any fundamental case to back that other than just saying, oh, the stock market's up high. You cannot make a fundamental case against that. Look at what companies are earning in 2018. Look at where their stock prices are, and you're going to see that it's ridiculous. Value compared to where we've been at historically, all right? The fourth part, global meltdown, economic collapse is due. So every single year, there are a lot of people out here that come out and say, oh, we're going to have a global, market meltdown, this and that. This happens constantly. There are always, there are some people in the market that we call perma bears. This means regardless of who's in political power, regardless of what's going on in the economy, high unemployment rate, low unemployment rate, these people are always bearish. These people are always talking negativity. They're always, saying we're going to have a collapse. Every single year they say we're going to have a stock market crash. Every single year they're going to say we're going to have an economic collapse. They're perma bears. They never change their tune. They're permanently like that, okay? And a lot of these people fall into two categories, okay? Well, a lot of them are run actual like gold funds and whatnot, so they want to get people to invest in gold. The only way you can make money in gold is if the other person pays more than what you paid for your gold, okay? So they want to flood people into gold. They scare them. You can go on Netflix or Amazon Prime. You'll see a lot of documentaries. And you basically, what they sell is they sell fear, and then they at the end of it, they kind of like pitch why everybody should invest in gold, okay? And so they're trying to get people into flood into gold. Oh, scary times, invest in gold, okay? And a lot of other ones just honestly sell books and things like that. And I can't hate on that. Like, make your money, that's awesome, okay? But let's be honest, like a lot of them just, they have a financial backing to basically be permanently bearish, all right? And that literally every single year they're bearish, okay? And I feel like if you're bearish every single year, how do you have any credibility at that point? If you're permanently bearish, guess what's going to happen? Almost every single year, you're going to be wrong, okay? Every once in a while, there will be a recession, and there will actually be a financial meltdown, and you'll be right. But let's say that's 1 out of every 10 years. Guess what? 9 years you were wrong, 1 year you were right, okay? So these permanent bears out there, times like now when the stock market's having trouble, you see CNBC and Bloomberg put these guys on TV like they never put them on TV before, and they go spew, oh my gosh, we're going to have an economic collapse, we're so due for this financial crisis, and they go into all their bearish points, and it's the same thing they said in 2017, 2016, 2015, 2014, 13, 12, 11, 10, every single year, regardless of what's going on, there's permanent bears out there. So I do not believe any of these reasons, and these are the main ones I've seen out there in mainstream media, I do not believe these are the ones, okay? We're going to get into my 2 reasons now. Alrighty guys, it's time to get into my 2 points on why I believe the stock market is in really rough times right now, and we're seeing massive amounts of stocks drop substantially, all right? I haven't seen this talked about on mainstream media at all. I believe these 2 reasons are literally why the stock market is going down massively, all right? This is the first reason, all right? The first reason has to do with China. Let's go into 3 things that we know about the Chinese stock market and China in general, okay? The Chinese stock market is down 50% from its highs in 2015. 50%, guys, in a matter of 3 years. That's an absolutely disastrous stock market, and it's just continuing to trend down. In 2018 alone, the Chinese stock market is down around 25%. That is a bear market at its finest, okay? So you could say since 2015, the Chinese stock market has absolutely crashed, and it is still in a massive bear market. Now, there's something we know. We know Chinese investors and Chinese funds love to margin out, okay? Which means basically they can invest more money than what they actually have. They can actually invest debt into into stocks. And for a long time, the Chinese stock market was doing so well that a lot of Chinese investors looked at it as, oh man, it's a faster way to get rich or richer. Let me margin out extra and extra money. And I've seen some things in China going on where people aren't just margining $1 for $1. So you have $1, you get $1 of margin. I've seen it in situations before where I've really researched this. I've seen it where people are investing $1 and they have $7 to $8 on margin, okay? And are buying individual stocks with this, guys. And I've seen that with funds as well. That is a scary, scary situation. So what ends up happening in a situation when you have a lot of people on margin, a lot of investment funds on margin, and you have a stock market that is absolutely pathetic as far as the performance has gone the last few years, is you have a lot of margin calls start to come in from brokerages and from banks saying, hey man, you're getting down to a certain level, like you need to raise capital, we need capital, you're gonna have to sell off your positions even more and take these big huge losses on stocks you own, all right? So what happens when a margin call comes is forces people to sell more Chinese stocks, regardless if they even really want to sell those Chinese stocks. Because once again, when you get a margin call, it doesn't matter if you're a fund or an individual investor, a little guy investor, a big investor. Basically what you have to do is you either have to deposit more money to cover that margin call, or you have to sell off position. What happens in most situations is they're forced to sell off bigger and bigger positions, which causes the stock market to go down more and more, okay? On top of that, they're also raising money by selling American stocks. So a lot of individual investors who invest in America through a lot of different ways. There are a lot of different ways you can invest in American companies still. If you have a good lawyer here in the States and a good lawyer in China, there are ways you can get around the system. And even as a Chinese individual, you can still invest in the United States, okay? A lot of tricky ways they get away with, especially as far as a lot of the big investors, a lot of people that have made millions of dollars, tens of millions of dollars, or hundreds of millions of dollars in China, looking to diversify their funds. They buy some American companies directly, or they actually are invested in funds which do it legally. There are a lot of Chinese investment funds that can legally invest in America, and the Chinese individuals or big investors out there can put money in these funds. Basically what ends up happening is they got these margin calls, so they raise money by selling American stocks, okay? Another situation there, all right? And so on top of that, you also have a situation in China right now where I believe a lot of people, a lot of big investors, a lot of big businessmen and women over there are getting scared that things are going to get worse and worse. We've seen the 10% tariff come on. This is why part of it has to do with the tariff, okay? We saw the 10% tariff come on. Now 25% is coming on here at the end of the year. So a lot of, I believe, Chinese investors are looking at this and getting real scared about their economy, what this is going to mean for the Chinese economy overall. And so they're looking at this and they're like, do I really want to go ahead and hold Chinese stocks right now? Do I really want to hold American stocks? Do I really want to hold anything? They're looking at this and they're like, wow, this could really get ugly for us. So that fear breeds into more selling, which ends up causing more margin calls for people and funds that are on margin, okay? And then selling breeds selling and panic, okay? Basically when you have, everybody out there selling their shares, getting really worried, panic starts to set in and it happens really fast. It's a lot easier to sell panic and sell fear than it is to sell positivity or anything like that, okay? If you were, let's say, you owned a pest control company, right? You would go to somebody's house and you could try to sell them on why they need to have, pest control, and you could try so hard and you might never be able to get that sale, right? Until that person gets bit by a scorpion or a black widow or something like that, and then the very next morning, all of a sudden they're calling your pest control company, right? It's so easy to, sell panic and fear when something bad happens. It's much easier, it's much harder to go the other way and sell positivity and why somebody should invest in things like that, guys. So all this, it creates a very, very volatile situation, a very bad situation. And I think this has bred it, went ahead and bled into the American markets now at this point in time, because a lot of these Chinese investors are looking at this and they're like, we got to raise capital however we can. We need to start selling off our American companies that we've diversified with and whatnot. That's reason number one. Now let's get into reason number two. All right, guys, now part two on why I believe the stock market is crashing right now, why so many stocks are getting absolutely devastated, also has to do with China, but this is a completely different reason than the first one, all right? So there are a ton of Chinese state-run funds that have massive amounts of money. We're talking about billions, tens of billions of dollars plus, all right? And basically these massive Chinese state-run funds are their job is to go ahead and deploy money out there and hopefully help their economy or hopefully build their wealth into more and more money, all right? Now, if you didn't already know, China is a direct investor as far as owning 100% of some some of the biggest Chinese companies out there in the world. If you look at some of the biggest Chinese companies, like the list of like the 50 biggest Chinese companies, you're going to see a massive amount of them are either partially owned or fully owned by the Chinese government, all right? That's something to keep in mind there. Now, so they make all this money, they make all these profits for whatever these big companies are doing, all right? And so what they go ahead and do is they invest that money out there. But what I see is I see a lot of these Chinese state-run funds that are actually selling off their positions, and they're putting that money into the yuan. If you've noticed that the yuan recently has actually strengthened quite a bit against the dollar. So what I see is I see a lot of positions being sold in stocks and a lot of that money going into the yuan. They want to hurt America for leverage in the tariff fight. We've heard China come out and say there are other ways we can hurt America, okay? Because right now the Chinese have no leverage in really this tariff fight, okay? They're at such a big disadvantage here right now. They're looking at this and like, we got to hurt America somehow. How are we going to hurt America? And they've come out and said we have other ways to fight in this other than just doing more tariffs on the United States, because we know there's only a certain amount of stuff that actually gets imported into China from America, all right? So they're looking for some leverage in this tariff fight. So they say we'll sell off our positions. We're going to hurt Americans' wealth. And so what ends up happening when the stock market goes down? Everyone's wealth goes down. Everyone pretty much across the board, okay? It doesn't matter if you're an individual investor in stocks, like someone like myself. It doesn't matter if you have a 401k. When the stock market goes down, everybody's wealth goes down. Every single American is hurt by that, okay? And what a lot of times will end up corresponding is sometimes real estate prices end up following that, and real estate prices get hurt as well, okay? So you look at a situation where China says, okay, we'll start selling off our positions in America, our investments in America, and guess what? All your guys' wealth is going to go down. And that's essentially what's happened. Like the last, let's say week or a few weeks in the market, like pretty much every single American has less wealth right now today than they had, a week or 2 weeks ago or 3 weeks ago or 3 months ago or 6 months ago, okay? So this is kind of a leverage by the Chinese here saying, hey, you know what? We'll sell off our positions and you guys can, feel the pain of this. Now, this does absolutely cause short-term pain. It causes every single person's wealth out there pretty much to go down. It absolutely causes short-term pain. However, I don't think it's the best move for the Chinese at all. I think that's a really bad strategic move by them, okay? Because all this does is create long-term gain for buyers out there. If the Chinese want to sell off Facebook stock and sell off Google stock and sell off Amazon and Apple stock and any stock and just all their stocks in general, right? Okay, yeah, that hurts all of us, right? All of us are going to see our stock prices go down, our wealth go down in the short term. That's absolutely painful. But when you look at it at a long-term basis, all this does is create bigger and bigger buying opportunities. But just because, a big investor sell out, or a bunch of Chinese state-run funds, or a bunch of big Chinese investors sell out of their positions, hurts the short term, but long term, those companies, bullish cases for the next 5-10 years are still all intact. So we get to just buy shares at cheaper and cheaper prices, all right? Remember, every share that is sold, there's someone on the end of that order that's buying those shares, okay? There's someone out there who's buying all those and is saying, thank you for these shares very, very much, Chinese state-run funds. Remember, people were gladly selling Apple shares 2 years ago for $100 to Warren Buffett, okay? If you didn't know, Apple's over $200 now. He's already doubled his earnings on a lot of those shares in a matter of 2 years. There were people selling those shares, and maybe they thought they were smart, or maybe they thought Apple was going to go down or something like that. Whatever reason they did that, Buffett was on the other side saying, give me those Apple shares. I'll take those. I'll take the short-term pain if you want to give that to me, and I'm going to make a lot of money on this. And that's exactly what he's done. He's probably already made tens of billions of dollars in profit on his Apple shares already at this point in time, okay? And never mind, what I'll do over the next 5 to 10 years. So when I look at what the Chinese are doing, what I believe they're doing, I do not think these are good decisions. I think it causes, some short-term pain, but look at the long-term gain it produces for buyers out there. I don't think it's a good move for them, guys. But honestly, these are the two main reasons I believe why the stock market is falling. The question is, how much money do the Chinese still have to sell off, okay? I'm talking about state-run funds. I'm talking about big investors. I'm talking about just, regular investment funds in general that are run out of China. How much more do they have to sell? Where do they get down to zero, American stocks held out there? Or are they even remotely close? We do not know how much they own. Unfortunately, it is too complicated to know the specific numbers out there. And never mind all the, illegal ways, some big Chinese investors invest in American stocks. We do not know where the end is, but in my opinion, this is going on right now, and unless they've already reached to zero, which I doubt they have, we'll probably continue to see some weakness here and there as they continue to sell off. I just don't think it's a good move for them long term. I don't think this really gives them any leverage unless they could get to a situation where they literally cause our economy to crash because of all this fear and panic out there. Unless they cause something like that, all it does is put them at a significant disadvantage because they sell off tons of great companies at ridiculously low valuations. That's all it ends up doing in the end. I want to know your guys' opinion down there in that comment section. Thank you for watching and have a great day.